A surge in retail interest and capital will almost certainly skyrocket Bitcoin to higher prices. Even after a new all-time high, we're yet to see any sustained involvement. Here we're going to analyze when retail buyers are likely to flood back into the market and if it is actually the bullish catalyst many are expecting it to be. Today, we're going to be looking into when retail are likely to start buying Bitcoin again, and where better to start than the active address growth trend chart we have here on BitcoinMagazinePro.com. Now, as you can probably immediately tell, these two moving averages, which are averages of the active network users, has actually been trending very much to the downside over the past few months. In fact, this 60-day moving average, and if I add on the 30-day or the 14, they all tell a very similar story, are showing we've not really had this few network users on the Bitcoin blockchain since pretty much all the way back here in early 2019 after the Bitcoin bear cycle when price was around $3,500–4,000. So really, we have seen a huge decrease in active Bitcoin network users. So is this something that we can maybe see as bearish that may limit our upside potential in this cycle? Well, like I said, if we just isolate just the 30-day moving average here, we can see recently we have had a little bit of a resurgence in this metric, but especially considering the fact that even as Bitcoin set a new all-time high at around $74,000, we didn't really see any big increase in network users. No retail flooding back into the market, no huge amount of capital inflows, which many are seeing as a somewhat bearish instance. If we look to the previous cycles where we could see this was pretty much increasing non-stop, and then even after the 2017 peak, once we broke new all-time highs again, this metric was very close to a new all-time high in the active address network users before, as we reached a new all-time high, this was very much looking to top out at higher than we've ever seen before. Whereas in this cycle, even when we were reaching all-time highs, this was actually decreasing a little bit on when looking at its monthly average. And now, as Bitcoin's had this pretty ranging, choppy consolidationary period for a few months, this has absolutely plummeted, like we said, to levels we haven't seen in about 4 or 5 years' time, which is, I guess, a little concerning that there's not a huge amount of new users coming on to use Bitcoin for its intended purpose as a peer-to-peer electronic currency. But maybe we've seen the definition of Bitcoin alter over the last few years. Maybe it's now seen more of a store of value, so we're not likely to see people using Bitcoin on a day-to-day basis. So what we can actually look at is to see how much new capital is coming in. Maybe we're not seeing lots of people coming into the market to use Bitcoin every day. Maybe we're seeing people come in, put their capital into Bitcoin just to hold, just to accumulate some wealth. So if we look at something like the Bitcoin realized cap HODL waves, which is an evolution of just the Bitcoin HODL waves. So first I'll define what the HODL waves are. This is just grouping Bitcoin network users into different age bands. So for example, this 10+ year, this very dark purple here, indicates that X amount of percentage of Bitcoin hasn't been moved in at least a 10-year period. So if we were to knock everything off apart from, say, the smaller bands, so 3 months and less, we can see that recently this actually reached 20% or just surpassed about 20%. So this is actually somewhat promising that we are seeing about a fifth of all BTC still being used by new network users. Maybe they're just not using it all the time that they maybe did in previous cycles. So what we can do now that we've actually defined how many users are actually coming and using Bitcoin, the realized cap HODL waves allows us to see the influence on the realized cap that these new market participants are actually having. So the realized cap is the average accumulation price of all BTC on the network, just the cost basis of every coin. So again, if we remove everything apart from that up to 3-month metric, we can actually see that again, even though there was only about a 20% amount of Bitcoin used by 3 months or less, they actually had over a 40% influence on the realized cap, meaning they were paying substantially higher than those longer term market participants. And this is pretty typical. We usually see this in every single cycle, but usually it's peaking towards this 70–80% region as retail FOMO in and usually end up buying the top of the market. So this slight surge in this is actually pretty normal, pretty healthy. What we can see in previous cycles, such as in 2019, we had a peak at a very similar level as we ran up towards that 14K region before the COVID dump. But then about a year or so after that, we actually made new all-time highs considerably higher. And something similar in 2016, mid-2016, when we saw this run up maybe to not as levels quite as high, before a little bit of a cool off period. And that's when the latter stage of the bull cycle really kicked off as retail started flooding back in. So really, I'd say we're at pretty comparable levels to those two regions. So like we could see, maybe there's not a huge amount of retail users coming in and using the network non-stop. There are new users coming into the market. There are new participants coming in and purchasing Bitcoin above what may be considered its fair value. But maybe, like we said, the definition of Bitcoin and the actual usage for most people has changed somewhat from this electronic peer-to-peer currency into simply a store of value. And if we go to something like the Bitcoin cycle capital flows here, we can see that we have had this initial spike up at the most recent all-time high. And this is looking at the amount of capital inflows coming in from holders from less than a month to the 1 to 2 year holders. And we can see the influence of these more swing traders and then these new market participants coming in. And again, very similar story. In previous cycles, we do usually see this initial pump up in this metric before a little bit of a retracement. Maybe the initial euphoria wears off. But then again, as we reach the latter stages of the bull cycle and we see this metric continue to rally exponentially higher, we haven't quite seen that yet. So really, even though we have seen some promising indications that new market participants have come into the space, maybe a lot driven by Bitcoin ETFs, bearing in mind that most of those ETFs are spot ETFs, so they are actually buying underlying BTC. It looks like they're actually buying to hold for the longer term rather than what we've seen before where it's a little bit more short-term speculation. And one thing we can also do is look to something like Google Trends. So we can actually see how much people are Googling Bitcoin, maybe trying to learn about for the first time or reinvest in it after a few years away from the space. And what we can see is over the past few years, especially since 2017 when we had this first euphoric bull cycle, usually it's about 6 months before we start rapidly increasing before a market peak. So as we peaked in December 2017, this started rapidly increasing in probably mid 2017, maybe at August, July, September period. And then something similar in 2021 when we started rapidly increasing in October, November 2020 before we topped out in March or April 2021. So really the fact we haven't seen this massive exponential increase in retail interest is actually a little bit of a good thing. We're having this much healthier move to the upside. We're having capital inflows coming in that aren't just based on pure speculation. They're just taking away the liquid supply of BTC to hold potentially indefinitely or at least for a longer period of time. Then there's just this new retail flood that comes in based on FOMO. So once we actually see a huge amount of Google Trends realization of new interest coming into the market, once we see the HODL waves and the realized cap HODL waves begin massively spiking to the upside, that actually indicates that we're probably towards the end of the cycle as coins move from old, more experienced traders to these new, less experienced market participants. What we can also take into account is the Bitcoin open interest, because a lot of people may be considering that with different Bitcoin derivative products, maybe people aren't buying underlying BTC anymore, but really it's a similar story. We haven't seen a huge increase in Bitcoin or coin denominated futures contracts basically since we bottomed out in late 2022, nearly 2 years ago now. This peaked at over 350,000 Bitcoin, or the amount of BTC held in these perpetual futures contracts, to where it is today, where we've actually been floating around the $250,000 Bitcoin region. So even as Bitcoin has rallied from around $15,000 to $74,000, this was actually decreasing, indicating that even though Bitcoin as a network isn't seeing as many active users, it's not as if people have given up trading and buying real Bitcoin just to trade derivatives, because we're not really seeing evidence of that either. I do just think it's mainly a narrative change and a shift in mindset from investors to, rather than holding this asset as something for the next few months to try and just make a quick profit, people are now actually realizing the market dynamics and supply and demand economics of Bitcoin and are now just purchasing and holding for the longer term, which is actually incredibly healthy for Bitcoin. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your number one source for Bitcoin analysis. So just to summarize, even with Bitcoin rallying towards $70,000 after 2 years of positive price action, we're still only seeing monthly active network users at comparable levels to when Bitcoin was beneath $4,000 after the bear cycle of 2018-2019. And looking at the HODL and HODL waves as well as the cycle capital flows chart, we can see there's yet to be a real influx of retail capital. And Google Trends also supports this with showing a lack of retail interest when it just comes to searching about Bitcoin, as well as any Bitcoin related topics. And while this may seem bearish, it is actually somewhat bullish, as usually when we see retail FOMO in, it's around 6 months before the cycle peak. So maybe all the retail interest we're seeing now is people that have maybe been on the sidelines, maybe accumulating BTC, maybe from spot ETF buyers who are holding Bitcoin with a much longer time frame horizon. Because we could also see that while derivatives may be playing a part in this, the open interest hasn't radically increased. So it doesn't even look like people have given up trading real Bitcoin to trade just fake leveraged Bitcoin derivative products. So maybe over the next few months, when we see potentially new all-time highs and we do start to see retail interest start creeping in once again, it'll definitely be interesting to watch to see if they are the traditional retail FOMO investors that come in just for a few months, or maybe if now, like we could maybe see with the data that we looked at today, there has been a sentiment and narrative shift to people coming in that'll maybe buy Bitcoin with no intention of just immediately selling it for a quick profit. If you liked this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the lack of retail interest coming into the Bitcoin markets, or like we've discussed today, the potential of a narrative shift for new market participants. Do you think this is very bullish for Bitcoin, as we're not seeing a huge amount of retail interest yet? Or are you a little bit more bearish, worried about the lack of network users? As I said, let me know in the comments below and on social media. I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.